Good morning, America, and the rest of the world from wherever you may be watching today. It's Thursday, 25th May. It's 12:30 UK time, 7:30 morning Eastern time there in the States. And welcome to another edition of Early Morning Market Watch with me, Stephen Hoad, aka the Stop Hunter, where I give you your morning caffeine injection of market analysis to see what's been going on over here in Europe, the rest of the world, and take you through into the day and the next few days. Now, you join me this morning, and I am a much happier trader than I was early part of the week. NVDA, I opened up my Benzinga movers watch list, and let me just bring that up now for you. Let's see if we can bring that in. Let's try and get it bigger. There it is. And as you can see, earnings out last night, and they absolutely smashed it, up nearly 30%. So any of you chartists out there, you're going to see a massive gap on those charts this morning. It's pretty sensational. And fortunately, I was long the straddles and the outrights as well. And even more fortunately for me, making more of a smile on my face this morning, Palantir and AMD, as you can see there as well. I'm also long those two. So happy days, really looking forward to the opening bell in a few hours' time. Now, I had been pretty grumpy the earlier part of the week, and I'd say with the way my positions were looking, it was all down to the debt ceiling games played between Biden and McCarthy, and they're still being played. It's very frustrating, very annoying when you look at the 31.7 trillion. I think it's about that sort of number of debt that is banging around. Will it make much of a difference? I studied economics at university, and all the rules of the game seem to have gone out the window now. So what does it matter? You put the debt ceiling up another $10 trillion. Does it make a difference? Are any of these, savings that the Republicans are trying to push actually going to do anything? Are you ever going to pay off, $32 trillion of debt? But what it is adding in is a mixed feeling across not just the States, over here in Europe, in the Far East, around the world, until this deal gets done. Because if the default comes, I think Janet Yellen said 1st of June for the day when the money runs out. It's fast approaching. They've got to get something sorted pretty soon. And to add on top of that, where we had the Fed yesterday with their meeting minutes, now pretty unsure what's going on in terms of interest rate rises going forwards. And if we look at the Fed Market Watch here, you can see a huge change in the probabilities of the rate increasing. Now, a week or so ago, this was up in the 90%. Everyone thought, no more rises, but now have a look, it's fallen to 67% and 33% for a possible rise. So that's on the charge at the moment on that side of thing. Plus, also you had some comments. I don't know why these guys do it. These Fed chairs, they put their 2 pennies worth into the mix and obviously add some volatility in around the trading, which doesn't help things at all. So first part of the week, pretty dire, but like I said, at the moment, again, the stocks, the tech stocks, the AI, the semiconductors absolutely running away at the moment. And NVIDIA up 27.7% before the open. So it's, like I said, watch that chart. It's going to be very exciting times. Now, what else do we need to know? Well, we had the Fitch credit guys down, putting the US on downgrade watch from their credit, score AAA rating. Basically, they're just saying stop playing about with the debt ceiling, sort it out. I'm sure that will be lifted then, but I think it's them just firing their torpedoes into, just make a point. Around Europe, well, earlier in the week it was PMI day, Tuesday. Very disappointing. Well, I'd say averagely disappointing sort of numbers, not very exciting, sort of doldrums type stuff. China again, not really coming out with any great data numbers to inspire bullishness from there. Also, they banned Micron. You might have seen that, and expect some retaliation from the US, vice versa, for some of those Chinese type tech stocks. as well. And today, out later, we've got US GDP numbers. That's 8:30 your time, 1:30 mine, and initial jobless claims. And then at 3 o'clock, we have pending home sales. So those announcements, expect a bit of volatility around price action there. But at the moment, it's looking quite a good, strong start. It's been driven by, like I said in the video, if we just have a look what's been going on now, this is the NASDAQ 100. This is a 15-minute chart, what's been going on, where you can see that overnight push up there in the price. And then actually from the early morning UK time, it's been on a slight push up as well, hit possible resistance around 13,950 sort of area in here. But hopefully we can see that push on through when it opens. And the S&P, what's been going on there, similar picture. After a bit of negativity the early part of the week, we're pushing on up, and it's again same story up, but just pulling back just a bit more than the NASDAQ at the moment. What else do we need to know? Well, Japan, Nikkei 225 pushing big highs at the moment, whereas maybe we're a bit more hawkish over here. Over there, very dovish, and there's a lot of foreign investment piling into Japanese stocks at the moment. See it as a more safe play maybe compared to other markets, and that's driven that, like I said, to highs. Services and manufacturing areas also pushing on very positive as well. Other bits of news out there, heard a lot about AI this week. Is it a mini bubble there? I still think it's got plenty of time to run. I think we're maybe just at the start. And Bank of America saying the S&P's got a target of about 4,300. So we're looking at the charts there, 4,150. So I think there's only another 150 of upside in there. Social media, one of my little snippets that I like to look at. I like to track what is going on. I've got some tools that watch the chatter across the different platforms. And this morning, unsurprisingly, it's tech, semiconductors, and AI driving the way. Stocks that are being talked about a lot: Coinbase, the crypto firm, NVDA, Microsoft, C3 AI, and other AI company, AMD, Tesla, and Palantir, and Target as well. And if we have a quick look at the earnings of the week, Palo Alto, that's one of the picks for me. Cybersecurity firm, up 7%, good results and looking good long term for the rest of the year. Obviously, we saw NVIDIA smashing it. And next week, we've got a few that are of interest. Now, I've picked out 4 for you guys to watch. Let me find them. So we've got Hewlett Packard, HP, out on Tuesday. Looking reasonably bullish on the chart there. Now, I've also put in them options market expectation. I've just taken the straddle, and it's a sort of sneaky way of working out how much the options market anticipating the price to move. And I've taken about 15-day period of movement, and they're expecting plus minus 7.3% movement there. Like I said, earnings out Tuesday. Then we've got Salesforce, very nice looking chart, ticker CRM, again similar type of price move, 7.9%. Then CrowdStrike, another cybersecurity firm, bit more volatile, actually have been looking good. That bit of a pullback there in April time, but again strong, about 15.5% price move in either direction over the next 15 days. And finally, on Thursday, those two, by the way, CRM, CRWD on Wednesday, Lululemon, the leisure wear, sportswear brand company, 9.6% over the next few days. Not looking quite as strong. This area here might just get filled. We're talking down to 315 if it breaks. You can see some noise over here as well, putting in that barrier. So that's the no man's land. Under that, we could see a price spike down to the sort of 315 area. So that's earnings covered. So let's crack into some commodities. Now, oil's been interesting as well over the week. on the plus side, which we saw the price moving up, three factors mostly driving it. Canadian supply disruptions. It's driving season. There's seasonality there at the moment, all the way through to Memorial Day. And we'll have a look at the gasoline chart, the RBOL gasoline chart in a minute, to show you what's been going on there. And also the Saudi energy minister came out and basically said, watch out, you shorts. Trying to frighten the market and sort of threatening that the OPEC Plus next week will cut production output more and drive those prices on up. But the Russians actually did come out and say we're maybe not quite as likely as what that Saudi guy was saying. On the negative side, we've got this debt ceiling banging around, still needs to get sorted, interest rates, and then China and global demand. And as we can see from the chart, again, I've just widened out the range from previous weeks, 64 to 83, nestling in the middle. In terms of other data, it's all neutral in terms of volatility and seasonality, and the commitment of traders data still looking more bearish, weak bearish at the moment. And what's been going on this morning, actually you can see the price pulling off on downwards down to about 70 to 80, $73. Pivot points around about 72.5 down there could provide support for the price. Let's see what happens on the open. I suppose most of the volume comes in between sort of 1 to 3 o'clock, so we might actually see a reversal of the price on back upwards. 75 looking a good upside. Now, some others. Copper is my bellwether analysis tool for the global economy. As I'll keep on mentioning, 50, 60% goes to China, 20% to the US. You see that price going down, then you can probably guess from that the global economy, the demand for copper is not so much so. And in turn, it's a bit more bearish, and you can see that in the price there, coming on down to, at the moment, $3.58. Maybe next downside, the early 3.4s. And today it's been a bit more flat, nothing much happening there at the moment. Now into some individual commodities. Gold failed to push on up. It tried, around this sort of, call it 2050 area. We were expecting that, but actually it's pulled back and then broken outside the pattern and resting down to this 1950. We got a lot of noise there, That could prove, good support area, maybe for a bounce. If it breaks there, then we're down to this next level, 1879, 1880, around about there. Now, RBOB gasoline, this was the one I was talking about for the driving season. Here we go. We can see that nice run up. Still think it's got more to go. 2.9, even maybe up to the 3.1s. We've still got a lot of time left for driving season to play out. Nat gas there on the right hand side, tried to break out and has moved back into that longer term pattern. And there's nothing really at the moment fundamentally to make it sort of more positive shift. No weather or supply demand issues going on at the moment. It's all quite quiet there at the moment for nat gas. Now moving into FX, what's been going on with the majors? Well, the black line up the top, we'll just switch them round, is the New Zealand dollar. That, after a good strong May, this is over the month of May, it's fallen off heavily. We've got the Swiss franc strengthening. And what you can see, the green line there, US dollar pulling up much stronger, and that's impacting a lot of these majors. Other than that, there's not much weakness other than, like I said, the New Zealand dollar, maybe the Australian dollar weakening off the pound, the yen coming back. Now, the yen's an interesting one because the Japanese government like to have a good control on what's going on there, and a cheaper yen will make those exports more favourable and help the Nikkei 225. So I'm expecting that to stay weak, and the euro, which was the weakest, just popping up as well. So have a closer look at the US dollar just to show you that increase. So this is pretty much most of May. If I can just zoom that out a bit more, you can see the green arrow there. That was the interest rate decision point. And after that, we've seen good, strong, positive run up in the US dollar. And that can be good, bad for many different reasons, depending on what end of the stick you're at. And my chart of the day, because of that New Zealand dollar weakness and US dollar strength, looking for New Zealand dollar. And this is a Renko chart, by the way, using a 20 pip block size for those interested. Looking for the breakout down from the 0.607 area to maybe this next level, which is just under the 0.6 area to the downside. Then we get into a lot of this noise over here on the left. The trend is bearish. The indicator's bearish. So all looking weak, looking, like I say, for that breakdown. So that's the chart of the day in the Forex world. And over to cryptocurrencies, nothing really going on there in Bitcoin other than some sort of minor weakness. We got that price moving off down. Where we're at the moment, well, it's just about 26,000. Got support over here, maybe along that channel, before it breaks further down. And we're talking 20,000, the next down level. Look at the volume by price over here on the right. Big spike over here at 16.5, 17,000. So again, that would be maybe my ultimate downside for the medium term there. And cryptocurrency performance over the last month from the heat map, well, it looks pretty red, doesn't it? So nothing much favouring the bulls there, only the Tron you can see there. So if your crypto trades out there, not much, like I say, to the upside at the moment. And heading to stocks, the German stock market this morning, today, so far, I would say maybe a bit mixed. It did get exciting first up with the tech sectors across Europe actually all picking up off the back of that NVDA earnings, and since then it's calmed down a bit. So I'd say it's a bit more of a mixed bag there on the DAX. And over in the UK, same sort of story. Consumer non-durables weak, energy companies like Shell and BP weak. Not too much positivity to pick out there at the moment. And let's have a look at those major indices around the world. Stock markets, FTSE 100, top left, breaking down at the moment out of that pattern, maybe heading towards those lows at the start of that around 7,250. The DAX has been strong. That's the German stock market, just pulling back. That trend line there would have it pulling back to the sort of mid 15,000s, 15,500, 15,600 area, somewhere there. NASDAQ, one of the best performing stock markets on the planet at the moment, and that's still rearing on up. And with the NVIDIA and following that AMD and those other type of stocks, very strong behind it. Maybe some more upside to come there. And bottom left, the US Russell 2000. I like watching that market. I call it like the domestic US stock market, and gives me an idea of what's going on. And we did start to see a little breakout happening from a long-term pattern, but since then it's just pulled back a little bit, gone quiet again. Going over to China, like I said, the variables out there at the moment not that great, and heading on down south, just breaking outside of that pattern as well. And the one we've talked about already, Nikkei 225, you can see still, storming on up. Just had a couple of quiet days, calming down, maybe some profit taking in there before maybe moving on up again. The fundamentals, the economics are there from the government side, so maybe some more strength there for the Nikkei to come. And US stock market, how did it close last night? Well, it was pretty red across the board. Like I said, the debt ceiling, the interest rate, Fed updates, all playing sort of negative on the market, but it should be a bit greener this morning, especially the NASDAQ 100 when it opens. And we'll have a quick look at those pre-market numbers before we leave today. And what's going on in the S&P 500. The VIX is a great guide to what's going on. If you see it going up, then there's a negative correlation to it. So that brings in, it's up, the market's down, and vice versa. And we can see that, it's been pushing up for the last few days, and that's bringing in this negativity to the price in this sort of sideways pattern. It hasn't been very exciting really for May and the end of April. Range 4,050 to 4,200. So hopefully things can change. Watch that. It's a good indicator, something to add into your trading arsenal. And then in terms of sectors, what's been going on, I've picked out 8 here that I'm taking a closer look at. Top left, China, as you can see, breaking down, sort of reflects their stock markets more generally. Real estate sector there, again, broken out that pattern, moving on down. Utilities also very weak at the moment. And metals and mining. Sorry for being so negative with all these sectors of negativity, but I did find some shoots of, hope amongst a few of those different sectors, ETFs out there. And unsurprisingly, it's all to do with tech, AI, semiconductors, that type of thing. Bottom left, you can see the tech moving on up. AI looking strong. Yesterday was a bad day. You can see for both of them, but still looking pretty strong. And regional banking, after the crisis a few weeks ago, I think some buying the dip pressures come in and started to push the market back on upwards for regional banking stocks, looking a bit more normal once again. And then finally, cybersecurity looking quite strong. It's had this sort of reducing triangle pattern going on and just breaking out. That white line's its 200 moving average. It's just starting to nestle above that. So stocks like we talked about, CrowdStrike, Paolo, which we will have a further look at in a minute, pushing that maybe up further. And my regular 3 I like and 3 I don't like. We're starting with the ones that I don't like. Top left, Dominion Energy. Who are they? Well, they're a producer, distributor of energy, so call them a utilities company. We've just seen the utility sector, struggling generally. Can it break down through those lows? We had lows over there. We're talking 48 and a half is the next downside target. And then we've got American Tower. It's real estate investment trust holding company. It hasn't been a very nice 2023 for them, at lows at the moment. Next downside 169, 170, and then we all know AT&T, again, telecoms not doing that great, and other companies like Vodafone over here in the UK also struggling. You can do an ADR on them in the US. AT&T though, breaking down those lows under 16. Next stop, call it 15. And 3 I like, DraftKings, the digital entertainment all-rounder. Strong 2023 so far, pushing on upwards, up 115% so far on the year. Just pulling back yesterday. It's got to get through those highs in the early 26s before it can get on up to $30. And new holdings, a Brazilian sort of banking digital platform, been doing very well. Also up nearly 100%. Bit of a dip through March, but very strong, pushing highs. Next stop, nearly $8. And finally, cybersecurity's Paolo Alto Networks, getting great earnings out this week, looking strong for the rest of the year. But definitely one of those sectors that should be growing. Very strong year, and hopefully moving up towards, say, that late 220s to 30s. So that's my quick rundown of the markets this morning. If you want to find out anything more about what I do and what I get up to, you can follow me on my YouTube channel at The Stop Hunter, and happy to talk more about the markets there. But I think we've got the pre-market prep show coming up very shortly. Stay around and watch that. And all that's really left for me to say is thanks for watching. Good luck with the trading. Fingers crossed for all those bulls on the NVDA. Take your money, and 30% increase. That's all great stuff. First thing on the bell when it opens. And hopefully with that, I'll see you next time. See you later.